Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the numbers and figure out what is really going on behind the corporate curtain. Today, we're unwrapping a rather interesting filing from Tectonic Financial Incorporated. Now, Tectonic Financial Incorporated is letting the world know about some pretty significant moves they're making. It looks like they're planning to pull their Series B preferred stock right off the Nasdaq stock exchange. Why would they do that? Well, we'll get into the nitty-gritty of it. The report tells us that on the 15th of January 2026, Tectonic Financial, or the company as they call themselves, sent out a notice about their intention to delist. This decision was actually made by their board of directors a day earlier, on the 14th of January 2026. Just to get some of the basic details out of the way, Tectonic Financial is incorporated in Texas. Their Nasdaq commission file number is 001-38910, and their IRS employer identification number is 82-0764846. The stock they're planning to delist is their Series B preferred stock, which trades under the symbol TECT-P and is currently listed on the Nasdaq Stock Market LLC. So the big news here is really about this delisting. The company has officially told Nasdaq that they plan to file paperwork with the Securities and Exchange Commission, or the SEC, to remove their Series B preferred stock from the exchange. This voluntary delisting is expected to be effective around the 27th of February 2026. It also means they're looking to stop registering this specific stock with the SEC and will likely suspend their regular reporting obligations for it. They've also put out a press release about this, announcing their intention to delist and also to redeem all of their outstanding shares of this Series B preferred stock. Now, the information in this particular part of the filing, item 7.01, is being shared for informational purposes and isn't considered officially filed in the same way other parts of the report are. This section dives into the actual redemption details. On the 15th of January 2026, the company notified the holders of their Series B preferred stock that they intend to buy back all 1725,000 shares. The price for these shares will be $10 per S-share, plus any dividends that have been declared but not yet paid. This redemption is set for the 17th of February 2026. But wait, there is more. T-Bankshares Incorporated, a company that Tectonic Financial fully owns, is also getting in on the redemption action. They're notifying holders of their 7.125% fixed floating rate subordinated notes due the 30th of July 2027, and their 7.125% fixed to floating rate subordinated notes due the 31st of March 2028. These notes will also be redeemed on the 17th of February 2026 at 100% of their principal amount plus any accrued and unpaid interest. Now, here is a crucial condition for all these redemptions. They are all dependent on Tectonic Financial or T-Bankshares Incorporated getting the necessary funding to actually pay for these redemptions. If they don't secure the funding, the redemption date could be pushed back, or the redemptions might not happen at all. The company can also decide to waive this funding condition if they choose. The filing also includes an exhibit, a press release from the 15th of January 2026 that talks about this delisting and redemption. And finally, the report is signed off by a Hag Sherman who holds the title of Chief Executive Officer. Now, let's put on our investor hats and really think about what this all means. Tectonic Financial is essentially making a strategic decision to simplify its structure by removing its Series B preferred stock from the public market. This can sometimes be a sign that the company is trying to reduce compliance costs associated with being a public company, or perhaps that the trading volume for that particular stock wasn't as high as they would like. The redemption of both preferred stock and subordinated notes suggests a move to streamline their capital structure and potentially pay off debt. The key takeaway here is that the funding condition is a big deal. If they can't secure the money, these planned redemptions and delisting could fall through. This introduces a risk element for investors holding this preferred stock or these notes. Are they confident in their ability to raise the capital? If not, why are they announcing these plans? It could be a way to signal confidence to the market, or it could be a bit of a gamble. From a Warren Buffett perspective, we'd want to see a very clear and sustainable path to that funding and understand the underlying business reasons for wanting to delist and redeem debt. Does this free up cash flow for more profitable ventures? Or is it a sign of financial strain? Without more information on their current financial health and strategic plans, it is hard to say definitively. However, the decision to redeem the subordinated notes implies they believe they can manage their debt effectively, or perhaps are looking to refinance at better terms later on. The redemption price for the preferred stock seems to be at par plus dividends, which is pretty standard, but the market price prior to this announcement would have been key to understanding if this is a good deal for shareholders. Ultimately, Tectonic Financial appears to be taking steps to reshape its financial obligations and its public profile. The success of these plans hinges on their ability to secure the necessary funding, which is the primary risk we see here. Investors should keep a close eye on how this unfolds and whether the company can execute its stated intentions. Alright, that is our breakdown of Tectonic Financial's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this is a smart move or a risky one? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description for more discussions and to connect with other finance enthusiasts. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.